Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the team at HIVE Digital Technologies. We're going to be talking about their Q1 earnings, their Paraguay expansion, and overall strategy for the back half of 2024. There's a lot going on at this organization. We're going to go through it all in today's presentation, but before we do, please take a second, hit the like button, you guys. It's a big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of HIVE, what you thought about their Q1 numbers, and your outlook for this company moving forward. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got the team from HIVE back in action. We've had Frank Holmes on the channel a number of times. He's the co-founder and chairman of HIVE Digital Technologies. We also have the longest running CFO in the mining industry, Darcy Daubaras, with us in today's presentation to talk about Q1 numbers and the strategy obviously unfolding at HIVE. So guys, thanks so much for the time today. Really looking forward to this discussion and a lot to get through.
Great to see you guys. Thanks for the opportunity.
Sure. So Darcy, because it's your first time on the channel, obviously you've got a lot of experience in this industry. You've been with HIVE for quite some time. Can you give us an understanding of how you got involved in the Bitcoin space overall, and then how with HIVE Digital Technologies?
Yeah, no, thank you very much. So I'm a CPA by trade, a CPA CA. I have my US designation. I wrote that exam many moons ago. And my whole career has been built around corporate governance, financial reporting, and a lot of experience with IFRS and US GAAP, Sarbanes-Oxley. So it's all around the controls, making sure that you've got doing the right things and documenting the right things so that a company can be as smooth as possible from a reporting point of view so that operations can do what they need to do, and I worry about the other side of the business. I guess my first exposure to Bitcoin was when I was working with another company. One of the young lads that worked with us says, "Hey, Darcy, they've just put one of the first Bitcoin," and it was in Vancouver, the first Bitcoin ATM in the world. "I bought some Bitcoin last night. Do you want to buy some?" And of course, silly me as a very conservative accountant, I said, "No, I'm not going to do that. I wish I could go back in time." So I followed it in the background since then, and I worked through many different organizations, and I was coming off of a company that I was working with in the technology space, and I got contacted. What do you know about Bitcoin? What do you know about the blockchain? And I had a bit of background, and through a couple interviews, met up with Frank Holmes, the OG in the industry. And, hey, we hit it off, and that was back in 2018, and I've been here ever since. So, I've been through all the ups, all the downs of the industry. Obviously, HIVE started out as the largest institutional Ethereum miner. So we've got a lot of experience in the GPUs, and we've evolved since then. And I've evolved with them. And I sort of describe it as it's been baptized by fire every single day. You're dealing with, a new industry, regulators continuously trying to figure it out. So part of my job, I feel, has been trying to work with the different regulators in the different countries that we operate in to educate them, because education is the biggest thing that everybody needs in this industry to understand it and not attack it. We're not here to steal energy from anybody. We use stranded energy. HIVE has always prided itself on green energy, and it's been a great ride.
Great. Well, we'll get into that green energy strategy in a second here. And I tell you what, Darcy, I think everyone in the Bitcoin space wishes they had a time machine and could go back to that first interaction. So you're not alone there. Now, you guys just came out with earnings. I wanted to talk through some of the highlights there. We'll get into some of that accounting treatment because it's really interesting from a Canadian miner's perspective with a HODL to see how that works, Darcy. But in terms of Q1 earnings here, you guys, maybe Frank, can you walk us through just some of the highlight or banner bullet points there?
I'm going to turn it over to Darcy, but one of the things that people don't realize as Hive is that we function in 9 time zones. We have to have documents in German for Switzerland, Danish for Iceland, Swedish for Sweden, Quebec is French, New Brunswick is English. They all come into English, and then they have to be reconfigured and sent back out for filings and documentation. And that's something when I see some of these other mining companies, they're in one country in one state, and they do not have that efficiency and how we function very lean and mean. And so I tip my hat to Darcy for pulling all of that together in the complexities. But on the financial highlights, I think that I'll turn that over to Darcy. But we're thrilled, really, really thrilled for the shareholders that when you do year over year for that quarter after the halving, I think a lot of investors don't realize we've been through halvings. Darcy's been through a halving. We're our highest grossing margin business evaporated. That is, Ethereum mining was always very lucrative as running a business in the data center business. That all went away, but we still come along and did well. So Darcy, why don't you try to highlight some of the financials and the difference between IFRS and GAAP?
Sure. Thanks, Frank. So it was a great quarter for us. As everybody knows, we've got an off December year end. Our year end is March. So we just reported our Q1 figures from April through the end of June. And we ended the period with $32.2 million in revenue and adjusted EBITDA of 14.9. And proud to, after the halving, still continue to have 449 Bitcoin produced. That affected everyone in the industry, but we were very lucky to have the foresight to start doing some upgrades of our machines, making them more efficient, and not wait until afterwards. So we'd started a strategic buying program to make sure that we were getting rid of those older machines that weren't as efficient, because we knew, as Frank had said, we've been through the halving before. We know that this is a tough time, and you need to front-end load it as much as you can. We did end up with a very good hodl position of about 153 million of digital currencies. Very little in terms of a debt side. We had current liabilities of 27 million, but we had assets of over 199 million. So very strong balance sheet. That's something that we've been able to pride ourselves on since I started back in 2018, is making sure we maintain a very strong balance sheet. All of our Bitcoin, and even when we were working with Ethereum, has always been unencumbered. We haven't hedged any of it or lent it out to anybody. We've always owned everything and had full control of that through the whole period. Taking a look at the increases that we've been able to do, we did drop a little bit down to 32.2 million from the close to 37 million in the prior quarter, but that's attributed to the halving and a little bit of weakness in the Bitcoin price, as all of us are experiencing now. But we were extremely proud and happy to have a net income for the period of 3.3 million compared to a 3.5 million loss in the prior quarter period. And very strong again, we ended the quarter with a 3-cent earnings per share. If you take a look at what it was a year ago, it was negative 19 cents. So HIVE has continued to be extremely strong, be one of the lowest cost miners. We've always taken a look at our SG&A, taken a look at our overheads, making sure that we run extremely lean. And that always sets us up for success. I've always had that mindset from when I went through some of the downturns with a hardcore mining company, is when times are tough, you got to really tighten the belt. But when times get a little bit better, you don't loosen it up completely. You keep that discipline of keeping your costs low, because especially in this industry, it's so volatile. You don't know how long the prices are going to stay down. So I always try to keep a mindset of this could change tomorrow. Things could be great on a Friday and you wake up on a Monday morning and something's happened. And, we experienced that a couple of weeks ago with the sell-off of what happened in Japan. And it went through the whole markets, and we saw that in the price of Bitcoin. So we always have to be ready for that. But as Hive has always been, we're looking long term. We were the first cryptocurrency miner out there. So we're not looking to be gone anytime soon. We are the OG in the industry, and we're continuing to take those steps forward to make ourselves more lean, more efficient, and more profitable for our shareholders.
That's great, Darcy. I myself, I'm a chartered management accountant. So when you talk about cost, and Bryce will confirm this, I'm all over costs. That's my bread and butter. So I'm always looking to see how we can do things, better for less effectively, and a good set of results. The one thing I want to sort of just bring up though is in terms of accounting standards that you guys use compared to the majority of the miners in North America. You're using IFRS, and the other miners are now using they've been using GAAP. Can you tell me the intricacies about, and it's really around the valuation of Bitcoin and how you guys value Bitcoin as opposed to the miners using GAAP, and how those subtle differences impact the bottom line?
Yeah, no, absolutely. Thanks, Anthony. One of the things that we're realizing is every time Frank, Aiden, myself talk to yourselves or to analysts, sometimes they're trying to compare apples to oranges because of the different GAAP. And one of the big differences that you mentioned is the valuation of the digital currency. So under IFRS, we take a look at what our digital currency holdings are at the end of the quarter, the reporting period, and we mark to market it. And when those end up hitting the income statement, some of that can actually be shown what we call above the line in net income. And because of IFRS, a lot of it ends up under the line in this section called comprehensive income. And what we found is if market prices are going up and you've got a huge gain for the period, if you're in the US under US GAAP, that ends up above the line, that unrealized gain. And under IFRS, it ends up, again, below the line into comprehensive income. So what Frank and Aiden and myself have to do is explain that to people or remind them. The analysts know some of this stuff, but they forget. So one of the things that we are looking into is is it what it would take to convert our statements into IFRS. And we've talked to the regulators and talked to the lawyers, and we should be able to do this so that we can be comparative, so that when the guys on the Bloomberg terminal have some information come in from our competitors, they know that what they're getting is comparable. And so prices come down, we're all going to be showing it the same way. And when prices go up, we're going to be able to show those unrealized gains above the line. And it has a substantial effect. If we take a look at just the Q4 of last year, I believe off the top of my head, it was over $50 million worth of unrealized gains that we had to show below the line, where if we were under US GAAP, it would be above the line. And now that we are working on an assessment, because that's the big one. But as I've learned through the years, the devil's in the details. So there will be some other things that will be different, whether it's the treatment of leases, the treatment of some of our contracts. So we are going through that assessment to find out what it would take to get us comparable, because it's important for the retail investor, I think, the most. When you're talking to the analysts, they sort of know what to strip out. But if someone's just looking at sort of, we'll call it the headlines, as a retail investor, they may not understand it. So we want to make it easier for those people and be more comparable, because I think at times we get treated a little bit differently because we are using IFRS and we're not using US GAAP. And we want to make it more transparent for our shareholders and potential shareholders that want to compare us to the others.
I just want to add to that when we first went public, we were the first, and along came other companies. Now there's over 20 public companies, and the majority of those public companies are GAAP. So all of a sudden we find ourselves being from a financial modeling, and I am personally finding some of the analysts, they're actually lazy too. They may be CFAs, but how they go and model the data, I think the CTOs from our competitors probably look at modeling all the disclosure data more than actually the analysts on the street of looking at every little line item. But for us, it was, okay, let's try to explain in GAAP, how do we compare apples to apples versus apples to vegetables? And that's really what we've had to wrestle with.
I'm assuming I mean, and I hear what you're saying. I mean, bear in mind that the FASB rules only came in a couple of quarters ago, so the roller coaster is evident now in the fact that as soon as the Bitcoin price changes, you know, you're going to be up one quarter, down the next quarter. The volatility of Bitcoin, you know, it probably needs rethinking about. But I think under the old rules, they were only allowed to mark down. They couldn't increase in value if the Bitcoin price rallied. So go back to December 2022, and the Bitcoin price was hovering just above $15,000. That was the low, and then miners couldn't increase their valuation, even though the Bitcoin price rallied from that date ever since. So it's probably an area that it needs looking at from all the accounting standards. I'm assuming that the adjusted EBITDA calculations sort of get through that, and although that's not a sort of like a GAAP or an IFRS way of producing the figures, it sort of like looks at how to fix the position. So you're looking more from probably from a cash basis. And therefore you can then start comparing miners. But I mean, I'm not going to go into, you know, I mean, adjusted EBITDA, and I think there's close to probably more than 30 public miners in North America, Frank, so well over 20. But I'm thinking that there might be 31 different versions of adjusted EBITDA on the market out there. So I tell people to sort of like look at that with a little bit of caution. I try to do my own free cash flow figures when I go through the accounts, and then just do a comparison. And generally it's there and thereabouts. There's not a massive difference. You know, you've got your cash flow statements there. So there's a lot of information on there that you can use to get, you know, the net cash from business activities is a good way of looking at how much you've spent physically in cash. Then you've got an interest payment on the cash flow statement to show what interest you've been paying. And then you can do some sort of like calculations to work there. So it's just interesting. I mean, you're probably the only miner that came up with a net income in terms of reporting, but like you say, below the line there is something like, I think, about a 20 million unrealized loss on the sort of like valuation of Bitcoin in your position. So, you know, quite rightly, we want to make sure we can try and you know, compare, but still, you know, going back to, you mentioned about the G&A cost there. I mean, that's something that you guys have probably, you know, looked at and kept to a sort of like a, you know, a low position all the way through. I've been in this position 4 years, and, you know, there's not many miners who can sort of like, who can have their operating costs as low as you guys have done in terms of percentage of the revenue.
Yeah, no, it's, as I say, it's always something we focused on. And it's a very good point, Anthony, is when you start talking about non-GAAP measures, there's a reason why we need to describe as non-GAAP. It's, you know, how does the miner want to describe it? How do they want to define it? So, you know, if there was a standard, that would help the whole industry. I know in the different industries I've worked with in the past, it's always been a struggle, is everybody reports it a little bit differently. I think even when people are taking a look at their cost of sales within this industry, everybody, you know, includes different things. Some of them will stick it into G&A, some of it will be in cost of goods sold. So it's trying to get, you know, more education and try to normalize it a little bit. But when you've got over 20 public miners out there, it's tough to get everybody to pull in the same direction, because they want to keep their quote unquote upper hand if they report a little bit differently.
Yeah, every miner can sort of like pull out a statistic that puts them on a pedestal ahead of everybody else, and it's interesting. I go to quite a few of the conferences now, and you know, you can have maybe 10 miners represented at that conference, and they'll all have their like 5 minutes on the stage where they'll indicate how, and it's good to see that they'll use a metric to sort of like, you know, put them there. But yeah, I produce tables for nearly 4 years now, and in terms of production. In terms of G&A costs, I mean, there's no really ones that can touch. I mean, Bitfarms and you guys, from a production point of view, sort of lead the pack, and you have done for 4 years. You rightly indicated earlier, Frank, about the Ethereum mining, and we'll come on to, you know, how you've tried to replace that revenue stream. But that was a massive revenue stream for the likes of you and Hooked 8 at the time. The margins on there, we were, you know, when it was happening, were just awesome. I mean, you know, above 90% margins, and when that stopped, it was like, what do we do now type thing. So we'll come on to that second. But yeah, and one thing I'll finally say is, you can't control the price of Bitcoin, but what you can control is the operating costs, and that's something that you've done admirably over the last few years.
Hey, now speaking of those alternate revenue streams Anthony just referred to, we'd be curious to get your guys' thoughts. HPC AI is now really the conversation in this industry. The CoreWeave deal really galvanized the entire sector and set some floor pricing in. We're curious to see, I know HPC has been near and dear to your heart for some time here at HIVE. What is the strategy over the next 12 to 18 months? What is kind of the vision on the HPC AI side of the house?
I think the big part is we spent close to $70 million and got bulk of it back. And from a revenue point of view, mining Ethereum before Ethereum evaporated. Then it was the repositioning of those chips on platforms where they rent from us. It's a different model. And in core is really a classic data center hosting business. And their big CapEx spend is by CoreWeave. So it's more traditional of what they're doing. They're really not looking for the customer. CoreWeave brings in the customer. CoreWeave brings in the CapEx spend because they need electricity. So what does that really say about the industry is it's the significance of your source of electricity that will be up all the time. You can't be using balancing the grid software like we do in Sweden and places where we go from 30 megawatts to 3 megawatts and then back up to 30. You have to stay at 30. And so we recognize there are two different factors. But one of the nice parts is that this equipment was all pretty well expensed away, and we've been getting incremental increasing revenue from it. And we take a look at what the G&A is. We've had hired a couple consultants in the process of building out that repurposing of those chips. And it's pretty attractive, but what we're cautious about is beating ourselves on the chest and going out with a whole lot of bravado, and this is what we're doing, because competition, people read what we have to say and then immediately turn around and try to go and emulate it. And so we have a very cautious, low-cost approach. We know that it's a nice margin business like Ethereum. We know that if you want to go on platforms that the scale is very different with impacting it. So you're going to have to eventually pivot over to the traditional where you go get the customer. Our model will be different than Core Scientific. We intend to get the customer and deploy it in our other data centers, which we're now busy building out. We've given that disclosure that, and it's very important, is that if you have a greenfield, it can take you 3 to 5 years, depending on the jurisdiction, of getting all your permits and your equipment and everything on site. When you have existing facilities and you have surplus electricity that's up all the time, then you can be up and running in 9 to 12 months. So we've gone and looked at our facilities in Sweden. We have 6 megawatts there. We own the land, we own the data center, and it's how fast do we repurpose that and put in H100s and 200s and Blackwells. Well, this journey, it's really important. It's been much more complex. It's invigorating mentally because it explodes my brain of HPC. But I listened to some of these presentations about, oh, we're going to HPC and we buy some Nvidia chips and all of a sudden it's in business. It's wrong. You're building a brain. And when you're going to go build with a Blackwell, what we have found out with dealing with Nvidia, because we're a platinum buyer of Nvidia chips, is the engineering is very different. The pipes for the electricity, it's huge increase in the consumption of electricity. They're heavy. The Blackwell chips are heavy. You're talking about 70 pounds picking these things up. So you have to reconfigure your whole infrastructure. And then we found out in our other Nvidia chips, we own the 4000s, the 5000, 6000, 840s. Well, people will pay you more per hour based on your Juniper cables. Oh, I'll pay you 8 cents more an hour. So it's been this incredible learning curve, and we've incrementally increased high margin business, which we're very happy with. We wish we could have scaled it faster, but we realize that would be too much risk our appetite for risk is very low compared to our peers. We don't do binge buying. We don't do binge anything. It's incremental. Bought 300 S21s today. Okay, good. 300. Where are they going to be delivered? Next week. Okay, good. Got 2,000 of them. We got 7,000 for you, but they're going to come in January. We don't want them. We're going to wait till January. That's been our model. The same thing is building out the HPC. But what people don't realize is that when we made the press release of 30 megawatts of HPC, that's like 300 megawatts of Bitcoin mining. That's friggin' huge. And today, when we look at what are we making on the best chips, Bitcoin mining, 11 cents an hour. That's all. What's your cost? Oh, it's 5 cents, 6 cents. Margins before G&A and salaries, etc. After your electrical bill, they're so tight. What happens when we're now putting our 4000s and putting those out and leasing them out? $1 an hour. What a difference. And is there scale there? Well, we would have turned it on already because we have to be careful. We don't want to, I guess, sabotage our business model, but we've been incrementally building it out, and it's been healthy for us, as you can see the past quarter, what we've done. But the 30 megawatts to us is going to cost us, rather than $12 million a megawatt, it's going to cost us 5 to 7. Rather than waiting 3 years, it's going to take us 12 months, 9 to 12 months. So we're very excited about that. And we're working on other components. And we feel, I guess, dealing with Nvidia, that when those chips the Blackwells come on, that we'll be in an incredible position in our locations for the best chips.
Hey, just a quick one, Frank. You talk about that preferred agreement with Nvidia. What does that really entail? Is that just earlier access or discounts or additional support, or what does that mean?
I think it's predominantly additional support, and you get the first call. They know that you pay on time and you can buy in size. What has happened in the industry is guys like Elon Musk go out and raise $6 billion, and they buy up all the 100s. So all of a sudden there's no supply. And the positive part was these other chips we own all of a sudden actually go up in value. Well, they've been written off. They're gone. Like, got a zero base close to value, but there's such a pent-up demand for these chips. And so we are in queue to get our 200s, our additional 100s, and our Blackwells. But it's interesting to see that if you just came in and you raised $300 million and you contacted them and say, I want to get these Blackwells, you're not getting them. They've already been bought. They've already been by people like ourselves or other people that have been big buyers. So that's what makes you the platinum buyer.
Sorry,
Sorry, I was just going to say, Anthony, one of the big things with our relationship with Nvidia is very specific about who they sell to. They've got a reputation that they have to uphold. So if they sell something to, I don't know, Joe's Corner Store, Joe Bitcoin over there, they don't know, and something goes wrong with them, people aren't going to go and say, hey, Joe, you messed up. They would say, hey, Nvidia, you messed up. So Nvidia is very careful with who they deal with. Their reputation's on the line all the time. So I think that that's part of it. And I learned a lot going down to their conference earlier this year, just seeing, the presentations, learning so much about it, and just the pride they take in their equipment and the pride that they have with their partners. It's important to them, and everybody wants to maintain the reputation.
Both Darcy and I went down to meet with Jensen, see his rock festival. It was like Warren Buffett's rock festival. And then Darcy and I went back for Michael Dell. He had another rock festival of 12,000 people out, crammed into the Venetian room. And it was really interesting to see the differences. You have to be a platinum buyer to be able to show your wares at these facilities. I don't know if any of you have here been to Warren Buffett's Love Fest in Omaha, but it's incredible that you go from, he has about 16,000 people, and you go through a tunnel, and there's Dairy Queen, there's insurance, Geico, there's the big jewelry store he owns, there's furniture stores, all the businesses that he owns. He's trying to show you, but it's nothing free. There's no free ice cream. You have to pay. And it's really a fascinating way of connecting with your customers. So Darcy and I have been very blessed to being able to go and see Nvidia's rock show, and then go back and see Michael Dell's rock show, and get out with the CEOs of Canada that are running both Dell and Nvidia. So we're doing everything that's possible to build out that part of the business, because we think AI is very, very important. But we also big believers at the Bitcoin network and the nodes. So we have our own nodes that are part of that Bitcoin network. We believe that it's so critical for the long-term the vision of Bitcoin.
So a couple of follow-up questions there. You indicated then is there a sort of like an issue with getting H100s or H200s because of the demand for them at the moment? The supply is not meeting that demand. And if so, how does that, I mean, if that's going to impact you guys, I'm assuming that just impacts the whole of the Bitcoin mining space for all those miners that I've said we're moving into this space. Now it's going to put maybe delays on some of their business models. I mean, the Core Scientific is, like you say, it's a totally different model. It's just providing facilities. Even the energies, Core, we have to negotiate the energy price with the supplier. So they even took themselves out the energy loop. So it even makes it even easier. They've got literally no risk about downtime. In terms of what you're doing within Hive itself, you're using some of those GPUs that you use for Ethereum mining. Do you have an idea of sort of like what percentage of those GPUs are still being used now for that process, for the new HPC process?
Well, probably about 10, maybe around 10%, I think, maybe a little bit more, but it's a small percentage of what we've got. So, yeah. As the demand grows, as we see the attraction through our aggregators that we're using, those marketplaces where their demand is, we can shift stuff around. So we've got that flexibility, that agility to be able to move, but we haven't thrown everything into it because we just haven't seen that pent up demand yet. But we're ready for it, and we're excited, definitely excited about it.
And in your last presentation, which went alongside your earnings, you've indicated on there now that you're at the 10 million annualized revenue per year. when do you foresee getting to that sort of like that top level in your presentation? So, trying to achieve the 250,000 a day instead of, literally a week.
That's a big question over the next 12 months. Is as we are touching up the engineering reports to upgrade our facilities. We've been very cautious regarding the quality of the engineering, and only 2 weeks ago, all of a sudden, preparing for Blackwell, you're going to have to do re-engineering. So we've gone back out to the engineers of this reconfiguration is very, very important. And so we're just very cautious of how we're building out. But I think in a year from now that it will be a significant contribution to our revenue and our cash flow. That's my sort of, I'm giving you my gut feeling from it, because it's not just the 30 megawatts. We have another 30 megawatts. But what we've not noticed is that Mr. Market out there doesn't realize that 30 megawatts is like 300. And everybody got excited over Paraguay because it's 100 megawatts. Well, 30 green energy is 300. So not at 100 megawatts, but 300, because the revenue you're going to get is basically on 10 megawatts is the same as 100 megawatts of Bitcoin mining. And so it will all of a sudden, I think what will happen is it will happen very abruptly and quickly, that all of a sudden there's going to be a quarter where it explodes on the upside. That exact quarter I can't give you, but all I know is we're doing all the conservative planning and double guessing ourselves for the right structure of a building.
I'm assuming, obviously you've had earnings, so you've had lots of discussions with your analysts, with your institutional investors, et cetera, et cetera. I'm assuming, is the conversation more at the moment, the current conversation more focused towards HPC, or do you still see there's an interest in the Bitcoin mining?
The analyst last week when I was in Wall Street, I know that Aiden was at the Canaccord conference, and he spoke on a panel with Adam from Core Scientific and a couple other companies in the AI business. It was interesting because it appeared that there was lots of AI interest, but really the people that knew what they were talking about in the AI business was Adam and Aiden. The two A's, they got the A plus. When you take a look at, some other people made some statements that they can be up and running in their facilities in 6 months. And both Adam and I looked over and asked them what miracle do they have. So I think there's a bit of a misunderstanding in how hard and difficult it is, but it is very stable source of revenue and margin, and the multiples. When you look at the multiples of revenue on data centers, like you would say, Digital Realty is a realty REIT model, but if you look at their EBITDA and you look at the multiples, these are trading at 20 times EBITDA. So our imagination says, well, what happens when all of a sudden we're doing 15 million, we're doing now 30 million a quarter, that's 120 million a year run rate. Then what's that at 20 times? And I think the big vision we have is to make that transition, that we're not just Bitcoin miners, we're the data center business, and our rating will go through that other dimension. The biggest pushback you still get in the capital markets is from the big banks. The big banks that if you have the word Bitcoin anywhere near you, then you've got some social disease, is the way the banks are still functioning in their anti-Bitcoin stance. And that's something that we've talked about. People have suggested to us we spin it out or do something else with it, whatever. But right now is how do we take our existing assets we've sunk money into, we've made all our money back on them Bitcoin mining, and we can repurpose them and get 30 megawatts, which is going to give us about 20 megawatts of revenue. Well, that revenue is going to be, I think Aiden was saying on the back of the envelope with the 100s at $2 is something like 350 million in potential revenue. 350 million. And if you did a 50% gross margin, you're talking about 175 million in potential EBITDA. So is it worthwhile for us to go down that path of take something we own and repurpose it? Not all of it, just repurpose a portion of it? Absolutely. And that's what we're going to do. And we're going to stay green only.
That's about half your market capitalization, Frank.
Yes, it is. And we're going to, retell that story. But I think the big part is we are going to stay focused in green. And I think that there is a strong shareholder base that actually likes the fact that we're green.
I was actually going to just talk about that, Frank. You talk about the exclusivity of these Nvidia chips. Another thing you guys have that's extremely hard to find right now is not only megawatts, but green megawatts. The question was going to be, would you ever deviate from that strategy to maybe find better opportunities or more easily find opportunities? But it sounds like that green energy strategy is near and dear to the core of HIVE, hey?
Absolutely. And also we're the first to really have a diversified portfolio. As a money manager, not all your eggs in one basket. And so we have, even with all of its complexities, have our assets all not tied up in one state. Can you imagine if everything was in New York State? Oh yeah, you got green energy there, you're in New York State, and basically they've shut you down. It didn't matter. You had an aluminum factory, it had its own hydroelectricity. And so we've made sure that we've had our challenges in so many different jurisdictions, but we want to try to diversify that. And it has been, and I've been public about it, it's been really challenging to go and get 100 megawatts of green energy. And we had tied up the potential for 250 megawatts in Paraguay. And the first investment, we bought the land, we bought beautiful, it's only an hour and a half from the main city, so you can drive there. Otherwise, it takes a long drive to go across that country. It's 4 times the size of the UK, but it's only 7 million people. It's a population like Houston. And so you say, okay, well, what are the logistics? What are we doing? And they changed the tariff on crypto mining companies because they had predominantly out of China, all these Chinese guys calling them up that will take all your energy, we want gigawatts, and then all of a sudden they feel they have this pricing power. And I've met with the president and spoken very clear that we're going to cap it to see that we have fiscal stability. We're pushing for fiscal stability in that jurisdiction, but it does take us from almost 5.5, 6 exahash to 12. And that will take us at this difficulty rate to 2% of the network. And we've always been functioning around 1% of the network. On Ethereum, we were like 5% of the global network. And so we just take a look at the risks of running these portfolios as an asset manager is spread the risk around different jurisdictions, just try to everything to manage these parts. And the biggest thing, Anthony, is that we still have this incredible efficiency, and so does Bitfarms is running their operation, and they are in different jurisdictions, but they're not as complex as what we are running and all the different languages in the financial reporting. So we've mastered this like a global money management company.
Yeah, no, absolutely. And while we're talking about Paraguay, I mean, obviously the agreement's signed now. You've put the time frame in the presentation there, so by Q3 2025. I mean, I'm assuming that's a firm position to get that site energized with miners performing this time next year.
Well, we will have 2 substations, basically breaking them out for 80 megawatts each. There'll be 160 megawatts. You can't use all of them, so you're going to have about 120 megawatts. You use 100, you're going to have an extra 20 megawatts. And maybe we repurpose that for the community. That will basically do electricity for 70,000 homes. We're always thinking of how we can recycle that electricity to benefit the community in addition to ourselves for the shareholders. So from that end, I think that we'll have, I think, 10 buildings. And so as each building gets built and we get the first 80 megawatts up, then we can start putting electricity through those machines.
So that you expect some hash rate to come on within the year then?
Yes, yeah, we're not waiting.
Right.
Yeah.
I'm just in my head, I'm thinking like the last site I saw like that was like the Helios site in Texas. And they spent their sort of like 8-9 months getting everything prepared, and then they energized. And we won't tell him.
As soon as we get those 80 megawatts energized and we got some buildings up, get those machines in. That's how we function.
Are you comfortable with the political landscape in Paraguay? I mean, we know Bitfarms, we know Marathon Digital are there. Do you think there's still things to be wary of, or do you think actually everything seems fine?
I think when you look at Latin America, it is probably the most balanced political structure in the country. I think the president of the country is totally bilingual, worked for World Bank, I believe went to Columbia in New York University. So he's clearly extremely articulate. He's about 45, 46 years old. And his family goes back to about 150 years ago. So he understands where they're positioned. I think what really resonates is that Bitcoin miners like ourselves, we are more stable in giving him US dollar income every month as a currency hedge than selling the electricity to Argentina. And out of the almost 200 million Argentina owed them, they just got back 100 million. I think it's 3 years late. Didn't we get the exact number, but they've got some of their money back, but other jurisdictions, they'll get their money back with us every month. And I think that that's very valuable in running the country, because what interested me was that they have one of the lowest GDP per capita, but they also have the lowest taxes. So therefore, people who are living in Colombia after taxes actually make less money than being in Paraguay. So it shows up in gross GDP per capita as being lower, but actually there's more disposable income in Paraguay. The other thing we noticed was that there's a lot less graffiti. There's a lot less lockup on all the stores that you see in Peru, you see in Mexico, you see graffiti everywhere. It's pretty safe and conservative in this context. So that helped us feel much more comfortable in deploying big capital into that country.
In terms of funding Paraguay, can you talk about how you're going to? I mean, is it a case of use Bitcoin, or is it a case of you'll raise funds to get that completed?
I think it'll be a combination. We our most recent ATM, the 100 million with Stifel and Canaccord, that's been all used up. So we're in the process of putting together a new base shelf, taking a look at a new ATM program, so that'll help. And what we've done in the past also is if we've got some CapEx that we need to spend, we've been willing to spend the Bitcoin. It's going, into reinvestment into the company. We're still working to build our HODL position. But when these opportunities come up, if we need to sell some Bitcoin to do so, in the past we have, and I think that we would take a look at that in the future. But we haven't set out in terms of this is exactly how we're going to do it. And there could be opportunities to do some other financings outside of the ATM.
Darcy is saying is that when FTX blew up, everything was no bid. The equipment itself fell down that we bought S21s, I believe, for $10 a terahash. So we did the math. Okay, sell the Bitcoin and buy that. Immediate delivery. Desperate people, desperate for cash, and we got our money back in 9 months. All of our money. So we have a triangle. We've got Bitcoin here. We have cash flow here, and then we have the ATM. And it's always trying to do rational, intelligent treasury functioning.
Yeah. In terms of, I'm looking at your hash rate at the moment. It's hovering around the 5 exahash in terms of what you've got energized, and operational is quite close to that as well. Paraguay comes on over the next 12 months. That's a project that's in place. Are there opportunities to increase hash rate at your current site by maybe replacing more efficient miners with some of the miners in there? And obviously, for that as well, you need the extra power. Is there any? Do you have capacity that you could increase between now and Paraguay coming online, or is it something a case of that's the focus to get Paraguay?
I think what's on the plan is what we've been doing is just continuously upgrading older chips and storing them for Paraguay. Paraguay's electricity makes them very profitable. And so we just think of that type of positioning with that equipment, but we're going to be spending every month. Someone has immediate delivery, we're buying those chips and we're upgrading our facilities.
Gotcha. Exciting times ahead. Frank, hearing you talk about Paraguay, low taxes, low electricity, low crime, I'm thinking if you need an operations manager down there, maybe me and Anthony go down and help you out a little bit. That sounds pretty good down there to me. I wanted to give you guys a couple minutes for closing thoughts here. Darcy, obviously great having you on the program. You gave so much insight into the reporting details and intricacies here with HIVE. Greatly appreciate that, as do our followers. But I wanted to give you guys the opportunity to close up here if there's anything maybe we missed or future catalysts that we should keep an eye on.
I think from my side, it's an exciting industry. And, I've been through the Ethereum, through the ups and downs, and it's something that we're in for the long haul. And we're really excited, even with the increase in difficulty, even with all of the struggles that are out there. We've been through a lot and we're continuing to be resilient, but we see the next frontier, and, we're doing it slowly, controlled on the HPC side, but we've got a great team in place to be able to take ourselves to the next level. So I'm really excited about what the future is going to bring with Paraguay, with the HPC side, and we're continuously looking for new opportunities. And who knows where it's going to be. It's tough. We spend a lot of time on it and sticking to our traditions of being green focused. It makes it a little bit more difficult. But we're proud of what we do. We're proud of the team, and we're continuing to move forward.
We're still doing over 5 million of revenue per employee. I think that's pretty awesome when I look at our peers. And we have the fiscal policy that every dollar is a prisoner, not to be throw money here and there. It's very thoughtful. Lots of debate and discourse internally where the dollars are going and how. So I think that, and we meet every day. We meet every day and sometimes twice a day at the opening at 7 a.m. for Darcy, which is 4 o'clock in Swedish time, to know where the machines, are they generating cash flow? Are we moving machines? And at the end of the day, we have Johanna calling in at 10:30 at night, and we have a huddle on any important things that took place during the day so that we function like Navy SEALs. And then that's our culture.
Wow. Yeah, and I know that you guys have been together so long, you've got that culture well ingrained within the team. Anthony, I'll flip it to you just in case you have anything else, and then we can wrap it up here. But a great discussion as always, you guys. Really appreciate the insight.
Yeah, just one final thought, and it just literally came to me during having the conversation now is about obviously the space at the moment with the hash price and effectively hash cost, the margins are getting closer and closer. Do you see in the mining industry consolidation? We've seen a number of some of the small miners being eaten up by some of the big players, and we're now seeing the likes of Riot Platforms go after bit farms. Where do you see the landscape over the next couple of years, Frank?
Well, I think that some of the real smaller ones are all lifestyle companies for the executives there. And it's not worth getting into a fight for it. I think that the Riot Bitfarms strategy for Riot's very, very smart. They trade at a huge multiple to revenue. They're part of all the indexes in the US because it's US based. That's really helped the valuations. Yeah. We've seen with Hut 8 when they went into the Russell 2000, yeah, but you need to have a US address, how that changed it. I think for them going and bidding for Bitfarms is very smart because it's going to be very accretive. And they're up to 19%. Now they can actually pay a higher price and still it'll be accretive. And it gives them the growth they need. I know both parties. I know people well, and hopefully it works out well for both of them. But I think that fundamentally Bitfarms is undervalued on a relative basis, and that's just what I think you'll get this consolidation. But what's also, I'll leave with you a thought. Fred Thiel is a very smart guy. And Fred Thiel has deployed and raised more money, what, 350 million in the past 6 weeks, buying Bitcoin, not investing in expansion. So what does that tell you? It tells you that there's a lot of money not going into buying the new machines. And it's a bet that Bitcoin prices trade higher. So I think that that's a pretty significant statement of what he's doing. So will the difficulty explode on the upside this time? The race with CleanSpark and themselves, et cetera. I think that people are looking at hodling differently. We've always done it from day one, and we do it incrementally, as long as we can try to show everything we can to modestly grow. I think these are some of the sea changes that are taking place in the Bitcoin landscape. And what we've seen with the HPC is that landscape will also go through the big change. But the big change happened earlier this year when AWS bought rights to nuclear energy, spent $650 million for a nuclear source of electricity. They're not worried about them being attacked, Amazon, for ESG and it's nuclear. So that is a big macro switch we're looking for electricity. So we'll see how they unfold, and that's what makes it exciting as an investor.
Absolutely, I'll keep my eye on the marathon buyout of that Bitcoin. I mean, I'm slightly different feel that we've seen Bitcoin miners buy Bitcoin back in 2022, and it didn't end great for those miners. Bitfarms was one of those, if I remember rightly. They bought a significant amount. Argo bought a significant amount, and both those miners were a stone's throw away from Chapter 11, effectively, at one point in time, with the amount of debt they had on the balance sheet.
Absolutely.
Yeah, and buys Bitcoin when you're actually in the business of producing Bitcoin. So for me, is produce Bitcoin at the lowest cost you can do. That's got to be the most accretive way for a company to increase value. But it's been, it's great to get your view on that particular incident there. Excellent.
Well, and if you talk about mining low-cost Bitcoin and making the most out of your machines, having a hodl, that's exactly what the team at HIVE here is doing. So we commend you for your work, you guys. Great quarter. Thanks for coming on today. Darcy, a real pleasure to meet you and get to hear some of your thoughts here alongside Frank. You guys, if you're still watching, hit the like button. Feel free to subscribe to the channel. If you have any questions for the team at HIVE that we weren't able to get to, feel free to put them in the comment section below. Thanks for watching, and we'll see you here tomorrow.